I'm Michelle Rook with a look at your closing markets. Livestock futures ended mixed on the day with grains mostly lower as we did see weather premium being pulled out of the market with some rains over the weekend in portions of the Corn Belt. And the 5 to 7 day weather outlook was more favorable with some cooler, wetter conditions, especially for the central and eastern Corn Belt. So that weighed on futures. But in addition, corn saw renewed technical and fund selling pressure, and it was tied back to the Commitment of Traders report, which as of last Tuesday showed that funds had covered 121,000 contracts in terms of their short position. And so there was renewed interest to sell today, and corn futures felt it as a result. Down 8 3/4 on the July contract at 375 1/4. We did close below a key support area there, that 376 level on the charts, while December was down 8 3/4 at 393 1/4. Soybean futures also set back. Spillover from the corn market, lower soybean oil as well as favorable weather weighed on soybean futures, so down 1 1/4 on the day in the July at 937 3/4. The November new crop contract was down 1 1/2 at 948 1/2. November contract also kind of hit some chart resistance, so we consolidated under that level as well when we couldn't take that area out. Soybean meal was up 60 on the day at 301.50, with soybean oil down 29 points at 32.82. Wheat futures ended the day mostly lower, kind of a disappointing close considering we were sharply higher in the overnight session, led by Minneapolis wheat, which once again scored new contract highs as we did see continued concerns about those tight supplies. Now that rally in Minneapolis wheat spilled over into the other two classes of wheat, and we actually saw new highs for the move in both Chicago and Kansas City wheat. But during the day's session, we couldn't maintain those gains as we got spillover from the lower corn market. The higher dollar index didn't help, and then we saw a pickup in harvest pressure, farmers selling, and as well a little bit of profit taking. So July Chicago wheat just 1 3/4 better at 467 on the day, but well off session highs. September up 1 1/2 at 483. Kansas City wheat down a penny on the July at 472 1/2, with September down 3/4 of a cent, 490 3/4. July Minneapolis wheat down 3 1/4 at 639 1/2, with the September new crop contract down 3 1/4 at 643 3/4. And we did technically kind of score a bit of a reversal there in Minneapolis wheat with that new contract high and then ending lower on the day. Oat futures down a penny as well, 268 1/4. That's a look at your grain markets. A mixed day in the livestock. We'll talk about that next. Welcome back. Livestock futures ended mixed today with cattle futures sharply lower, hog futures sharply higher. We did see some cattle hog spread action going on, and cattle are on the short side of that spread, but we saw additional pressure coming from technical selling and fund long liquidation. And funds have been getting out of their near record long position in this market ever since June 6, when we scored those key reversals in the October and December contracts on the charts and a double top in the August. So continue to see them exit those long positions. But in addition, we were working in last week sharply lower cash trade, and then choice boxes were down 33 cents at noon as well. The live cattle for June ended the day at 120 even, down 170. August at 116.10, down 207, and October at 113.70, down 165. We did do some technical damage to the charts here, closing below some key moving averages and making some new lows for the move. That was true in the feeders as well. In the August contract ended down 287 at 145 even, September down 287 at 144.47, and the October down 292 at 142.90. Hog futures higher on the day. They were on the long side of those cattle hog spreads, but we also saw fund buying and commercial buying tied to sharply higher cash and cutout values. The cutout values were up another 94 cents today. Cash trade in the national direct market up 81 cents on the noon report, and so the market reflected that. And we did score a new contract high in the July lean hogs, up 157 there at 83.90. August up 235 at 81.47, with the October contract 260 higher at 69.37. That is a look at your closing livestock markets. I'm Michelle Rook. I'm Michelle Rook. What are the priorities for the new U.S. Secretary of Agriculture? I'll have this story here from the nation's capital. As he starts in his new position as U.S. Ag Secretary, Sonny Perdue says his priorities for agriculture include trade, labor, and regulatory reform. On trade, Perdue wasted no time creating a new position as part of USDA reorganization and as directed in the 2014 Farm Bill. Joining us with market analysis, Brian Doherty with Stuart Peterson out of West Bend, Wisconsin. And Brian, let's talk about this corn market. We've had a pretty good pullback off of the highs in June, and it's really been a lot about nervousness about what the world and European situation is, right?
Yeah, you know, that's been one of the key issues there. There's two things. We peaked in late August on the weather, and then once we pulled back, we saw a lot of liquidation as the Europe issues really came to light, speculators, investors just stepped away from the market, and we saw a 25% retracement. We've since bounced, but now we're kind of in a sideways pattern the last month.
Although the cash basis levels have been incredibly strong.
They have, and that's a sign of tight supply. No matter how you slice it, this year's crop is going to be off about 1 billion to 1.2 billion bushels compared to what it could have been. And with all the on-farm storage we have and good cash flow, farmers aren't ready to sell anything right now. They've just gotten done with harvest. It's in the bin. They don't want to pull it out, and it's not coming out for some time until they feel the pain. They need the money, or prices rally.
And prices would rally on what?
Well, lots of things. First of all, you still have a very, very strong demand base, but the end user mentality right now is still hand to mouth. Prices are high historically. You're not seeing very strong export activity, and I think your dairy producers, hogs, those guys are just buying what they need on a day-to-day basis, so you're not going to get any front loading right now. But from a larger perspective, if we saw money come into the marketplace, I think it would view corn even at $6.25, $6.50 as relatively cheap as we head into the winter months.
Yeah, they're value-based buyers, the funds are, and so we're getting at those levels, aren't we?
Absolutely. When you look at inventory, 850 million bushels roughly, you divide that by usage, that's not enough. So we absolutely need big crops out of South America and the U.S. just to meet current supply. You got crude oil pushing the $100 envelope all of a sudden. Ethanol is going to be in good shape. We just don't see a real scenario where demand is going to diminish much from here. Yet, the USDA continues to chip away at those numbers. So that's what the market has to work with, but that's why the cash market's leading the rally and not futures.
All right, well, thanks for that analysis this morning. Brian Doherty with Stuart Peterson, West Bend, Wisconsin. More Ag Day in a moment. I'm Michelle Rook. A big swing in acres is anticipated for 2017, but we'll find out what farmers really intend to plant today on Ag Day. With wheat prices near 10-year lows in 2016, it's understandable that farmers might plant less acres in 2017.
With the cash prices and with market prices where they're at, they're way off. They're $2-3 away from that break-even cost.
However, corn prices have also been below break-even, and farmers have seen the corn-soybean price ratio favoring soybeans most of the winter.
You can't sell corn right now, new crop, at a break-even, and you've been able to do that on beans for quite a while.
Some of the increase in soybean acres is coming from corn.
Those who have been growing continuous corn will look for an opportunity to put some soybeans back in the mix.
And some acres are shifting out of wheat. In fact, acreage could be below 46 million nationally if the wet conditions lead to less spring wheat in the Dakotas.
You know, we're seeing the acres shift over definitely to the corn and bean areas where they're capable of doing that. The ironic thing is the last time we've seen acres this low, we actually planted the wheat with a horse and a plow.
While there is general agreement about a shift in acres this year, the big question is how big will the shift be? Some private firms are estimating more than 5 million more acres of soybeans and more than 4 million acres less corn. But some farmers are skeptical, including the president of the American Soybean Association.
And I really don't think you'll see 5 million acres of more soybeans this year. If that happens, that'd be the first time in history we've had more acres of soybeans than corn. And I just don't think that's going to happen.
I also sell seed, and I've not seen a big shift. The guys that raised successful corn last year, they want to raise corn again.
And many farmers say they're sticking with their rotations.
In Iowa, I think in the Midwest, where we have historically had a corn-soybean rotation, on our farm we're not changing anything. I don't think most of my neighbors are changing.
I'm going to hold the course. I'm a 50-50 soybean corn rotation. I will continue to do that.
So once again, there may be some surprises on report day. And even then, weather can trump all of that. I'm Michelle Rook reporting for Ag Day.
Regional reporter Michelle Rook picks up the discussion.
U.S. Farm Report Market Roundtable coming to you from Farm Fest here in Redwood County, Minnesota. And of course, the big question that we have had, the big debate most of the season has been how big is this corn crop? Are we below the 158.7 bushel per acre yield average that USDA has pegged us at, especially without the heat in July? Let me start with Mark Schultz. What do you think?
Well, Michelle, I think we're probably leaning that way. We pulled ours down to about 155.8 right now on the national corn yield, and I may go a little bit lower, and that would just depend on what the moisture does in rainfall over the next 10, 12 days in Nebraska and Iowa. I've got to watch that very closely.
Chip, what do you think? You're in the Eastern Corn Belt. Conditions over there maybe don't look as good as over here in the West.
Yeah, high variability. I agree. I think that crop size is shrinking with the heat that we've had here. I think the key in the market's mind is going to be, even in these areas that have had moisture and the crop looks good, how are we filling? And so I think it's really important as producers to walk your fields, because it could be surprising how we fill this crop.
So Brian, where do you guys have your trend line yield at?
We're pointing down toward that 155 and lower. The good corn is good. It's not going to get much better. The lousy corn is lousy, so it's that in-between ground. And I think the market somewhat voted this week. Expectations are that yield is declining in areas that looked really good 2 or 3 weeks ago. Hot temperatures and lack of moisture.
Okay. Sue, what about you? We've seen some as low as 150. Is that too low?
Well, I think for the moment it may be a little bit too low.
So if we have abandoned acres, we have lower yield, say it's even 155, what does that put our ending stocks number at, Sue?
Well, I think if it's at 155, your ending stocks fall somewhere around 373 million bushels. And that would be a stocks to usage ratio of probably a 2.8, 3.1 number, somewhere in there, and that's record low.
So let's talk about where we go for price projections. Do we get above the 722 3/4 high on new crop?
We do. If you look at I'm a chart reader, so if you look at the charts, we've gone sideways for 2 weeks, and I mentioned on my reports 3 weeks ago that the weather in the end of July and the first 2 weeks of August will be the most critical in the last 2 decades. And it hasn't gone to the better.
Okay.
So consequently, if you look at the charts, you've got an inverted head and shoulders formation. A breakout yesterday points to about $8, $8.15 on that chart formation.
All right. We're going to talk about soybean crop size when we come back. More U.S. Farm Report in a moment. We're here at Commodity Classic in Nashville, Tennessee. Joining us is American Soybean Association President Steve Wellman. And Steve, Commodity Classic bringing together 4 of the nation's largest commodity groups.
Yeah, that's right. It brings together corn growers, wheat growers, soybean growers, and the grain sorghum producers.
And lastly, biotech approvals. You'd like to get those sped up, right?
Yeah, biotech approvals in the world for each new trait has to be deregulated here in the United States.
Thanks so much. That's Steve Wellman, who's American Soybean Association President, on the road for Ag Day. I'm Michelle Rook here at the Commodity Classic.